Well, we'll start all over again. Welcome everybody to Trader Merlin show. It is your I'll just do the whole intro again. Yeah, I guess I had my mic muted because I was talking on the phone before I did the show today. So here we go with sound on. I see the needles popping. Thank you for typing that in the chat. Lisa, you saved me and others out there. So let's go and discuss the topic du jour. It was a silent show, right? I'm doing a mime the show today. Questions are what drive this program. I could just come on and talk about things all day long if I wanted to, but it's better if I have interaction, better if I have engagement, which you guys are awesome at that, and I love the interaction I get from you on a regular basis. Today's show is revolving around a question that came from Les, which is he's always one of the first ones to comment on this chat almost every single day. Les asked, what does this mean when you have cash on the sidelines, right? Is it just like I'm at a football game and there's piles of cash? Well, how do they measure that? So that'll be part of the topic. Another question came from Thomas. So let me talk about this real quick. The stock market kings of cash. And I think that this is a very interesting topic because it's important to know when companies are hoarding cash or running cash thin. If they don't have a lot of cash on hand, they may not be able to fund their operations, and that could be a sign of weakness, whereas too much cash may give us signs for what may be coming ahead. So what I'm going to ask you guys to do is just pick a stock. Think of the whole universe of stocks out there and say, okay, I'm going to scour across the board here and say, who do I think has the most cash on hand, right? Which publicly traded company, they have to be public because it's the only way we can see the information, but go ahead and type it into chat. What do you guys think? Who has the most money right now in cash? Like literally just sitting in an account, they've got cash or cash equivalents, which would be, savings deposits, short-term bonds maybe, and even CDs. But I'm curious what you guys got. Type it on in there and I will show you a chart here, which I think is pretty amazing. And it's crazy to think that there's that much going on with one company, right? They just have so much money. So Thomasina starts things off quickly with Apple. Logical guess, right? A lot of people think Apple is one of the bigger ones. They're not even in the top 5. So that should be a shocker to everybody out there. I see 3 people saying Apple. Apple is number 6 on the list. Google is number 2 on the list. And Jim and Liz got it right away. Yeah, and Chio, Berkshire Hathaway. Berkshire Hathaway has a staggering amount of money. So what I did is I went out there and did a little bit of research for you. And let me just get this table over here. There you go. Now, before I show you the table, just so I can get these 2 questions shown to you so I can get it out of the way. The first question was, thoughts on Berkshire Hathaway's cash holdings? That's from Thomas. And then Les says, I have a question about money on the sideline. With the talking heads, I often hear them say there's a lot of money on the sidelines. How do they know that? What are they looking at to know that money is not being pulled or invested from open positions? Well, first and foremost, when they say cash on the sidelines, that's going to be cash equivalents. So that could be CDs. And if you're a publicly traded company, you must disclose where your holdings are at. Now, this has to be done on a quarterly basis, which is why when earnings announcements come out, people are just scouring through all those financial numbers, looking for data points which could lead them to believe that a company might be cash rich, cash poor, how their operations are going, and many other things we can glean from a financial statement. But the cash one is our topic today, which is literally they're sitting on cash. Now, why would a company want to sit on a lot of money? 2 things. Let's say we all have a publicly traded business, right? We're a company out there and we believe that things are looking a little bleak going forward, right? Maybe the future's not as bright as we think. We're making a bunch of money. We can keep that on hand and wait for a better opportunity, maybe to make an acquisition or buy something, or expand our facilities, maybe wait for better times. So that's one reason to think that companies have more cash on hand. Now, if companies have very little cash on hand, could be a sign that they're running thin on their margins, that they're not doing so hot. So again, it's important to check out the cash on hand. So here is our table of cash kings. Let me bring it up here, just so you guys can see the list here. Berkshire Hathaway has an astounding, a staggering, a whopping, colossal, unbelievable $276 billion in cash. Let's just say that. 276, it even rounds up almost 277 billion. Alphabet has 100 billion, Amazon 89.59 billion, Microsoft 75 billion, Interactive Brokers, which may surprise a lot of people here, Interactive Brokers 69 billion, Apple 61 billion, Meta 58, American Express 52, Charles Schwab. Remember we heard talk about Charles Schwab potentially having liquidity problems and maybe going bankrupt because of all the bad loans. They got 39 billion in cash. There's Nvidia. Nvidia's got 34 billion. Ford's got 34 billion. General Motors, 33. I'm not going to read through all of these. Tesla's got 31. You've got Intel, ExxonMobil, Johnson & Johnson, Visa, Apollo, Coca-Cola, and Synchrony Financial. Rounds out our top 20. And I just wanted to show you those top 20 just so you kind of see the numbers here. Now, what I did is I summed all of these up. And by the way, just so you know, I'm not pulling these out of thin air. These are all disclosed in their quarterly report. So these numbers may have adjusted or been changed now, right? It could move. But when they made their last earnings announcement, this is what was disclosed through their SEC filings, and that's what these sites gather onto. So all told right now, the top 20 companies, now remember there's thousands of companies in the United States, but the top 20 alone have a whopping $1.16 trillion worth of cash. 1.16. That is an unbelievable amount of money just sitting on the sidelines. And when you look at, Berkshire Hathaway, who's sitting on 276 billion, Thomas asked a great question, which is, what are your thoughts on it? And knowing what I've know about Warren Buffett, which is he's a value investor, it tells me that he doesn't see anything of value right now. If Warren Buffett is selling his portfolio and he is a value investor, meaning he's looking for things that are undervalued, they've sold off and they have some good value left and prospects for the future, but they're just maybe a bit oversold right now, that's what he's looking to buy. Well, on the flip side of that, when something may get overheated and too far extended, he's going to look at it and go, man, this is worth way more than it should be worth. I'll get out of these positions. When they come back down to a normal level or even a depressed level, I'll look at buying some of those. So when I look at Berkshire Hathaway, he's got, again, $276 billion. That's over 25% of the total company valuation. That's 25% of their money is just cash. Their value is just cash. It tells me that Berkshire Hathaway thinks these markets are overbought, that they're overextended, that there's no good buys right now, that everything's just too run up. And I think many of us here have been making that point as well, right? A lot of us have looked at that and thought, man, these earnings are just really high and the PE ratios are really high. Hey, Big Ab, good to see you. Buffett has been selling a lot of Bank of America. Yes, he has been selling a lot of BAC, right? And you would think, Les, that Bank of America would be a hold, right? Well, if you look at the chart of Bank of America, and mind you, again, this is why I hate the media. I despise the media because this article, you've been hearing about this one, Les, has been, Warren Buffett just sold. Well, no, he didn't. Here's the chart of it, and I'll willing to bet you dollars to donuts that Warren Buffett started selling back here in early July, right? That's probably this big piece here. But yeah, look at the chart. I mean, it's been a phenomenal run up here. It's been a great move up for Bank of America. Now, obviously, we're not back to the all-time highs we saw back in February of 2022. Or actually, it's all-time highs? Let me real quickly check the monthly here because we could be, we're not back to those all-time highs that go all the way back into 2006. But, Warren Buffett made a very, very, very pretty penny on Bank of America. So for him to sell out of it doesn't really, I don't think that's a bad thing. It just has me questioning what's the future for the market. Now, all of these companies, again, Alphabet, Amazon, Microsoft, most of these, the Magnificent Seven we talk about are on this list. They're all very cash rich. And so Nvidia down here with $34 billion is basically making a play with their cash. They're saying we're going to do some share buybacks here. So they'll be doing a significant amount of share buybacks for Nvidia. That's one thing you can do with your capital. Another one would be to start paying out a dividend for your shareholders, which of course is shareholders love that when you can get your nice little bonus check right there. But all in all, for me, when I see a big cash balance like that, it's a sign that markets are slowing down, that the prospects going forward are better to keep some cash. And as these markets start to slide, Amazon can go out there and say, hey, we're going to buy this company and this company because we got almost $90 billion in cash. Or Berkshire can go back into Bank of America and say, I sold this thing at 23, 24, 25 bucks, but I'll buy back in when it gets down to $5, right? Actually, Bank of America, he probably sold in the 40s. So, Thomas, that's what I make of it. The fact that you see companies like Amazon and Microsoft and Apple having a lot of cash, that's kind of been the case for a long time, although the amount of cash has been getting better and better and better. I mean, they've been building these positions. But Berkshire is one that just completely stands out, right? Out of the top 20 companies there, they have 25% of the cash. That's a lot. And these are monster corporations here. So all in all, I think that this does speak volumes to the current state of the market. I think it means that Alphabet, Amazon, all these companies on this list are okay, right? They've got a ton of cash. Now, what I'm not measuring in here, and I don't know this, is how much debt they're carrying, right? Obviously, there's going to be some of these companies are going to have some debt along the way. Even though they've got a lot of cash, they just borrowed at real cheap rates. They'd rather keep this cash to put to use somewhere else. But it does open the door, in my opinion, for any of these companies to make some pretty significant acquisitions, and Berkshire Hathaway looking to buy something. Now, when we look at the overall market here, let's go back up to our SPY, or let's do ES futures. You know, we've got this market that appears to be getting a little bit weaker. It has not made a higher high over the past month. It's significant in my book. And, you know, Warren Buffett liquidating his portfolio. So does that mean that Warren Buffett expects this thing to have a significant decline? I think so. I think Warren Buffett is basically saying, it's just not worth the risk to keep holding now. I'd rather go to cash. And if we do get a big sell-off, excellent. We'll be looking to buy. If we don't, then I'm not missing out on too much more upside, right? It's about weighing the cost. Do I think we're going to have another 30, 40, 50% upside the next year? Or do I think the probability is higher of a bigger downside move? And to me, that's what Berkshire Hathaway is kind of signaling with their recent selling of Bank of America, as well as many other things. They sold some Apple, they sold some Wells Fargo, they sold some Bank of America. So they're getting out of these positions that have fared very well over the last few years. So cashing out, Rob. Yeah, absolutely cashing out. And what's funny is Warren Buffett's one of these guys, you know, he's famous for saying, if I'm going to buy one share, I'm going to buy the whole company. So to see someone of that caliber, especially with, you know, $1 trillion worth of capital in Berkshire Hathaway, say things like, I'm selling, that should be a red flag. Now, let's be clear, it doesn't mean the markets are going to crash. It means that from Buffett's perspective, things are just overvalued. Now, they may go sideways for a while and flounder around, and maybe he finds some other place to park that $280 billion. But for right now, he'd rather have that in cash. And that says, to me personally, that he sees weakness ahead. Is this good for other companies? Well, yeah. Look, if we get a big market sell-off, all of these companies that you see here, in my opinion, are poised to take advantage of it. So should the market have, let's say, a 20% drop, right? And let me map out here on our screen what a 20% drop might look like from current levels, right? If we were to fall 20% from current levels, that would put the S&P 500 right around 4,000, call it 4,400, right? So 4,400. If Warren Buffett could just redeploy that $276 billion at a 20% discount and buy something that may have sold more than that, then he's going to do very, very well. So, and again, all these companies, Amazon, Alphabet, Microsoft, you know, if I'm Amazon and I've got all this cash, I look at a company like Rivian, which I'm already invested in. Rivian, myself and Amazon are already invested in Rivian. You know, if Rivian takes a big hit because the economy slows down, which could very well happen, you know, all of a sudden Rivian's might be down to that, you know, $5, $6 area. It wouldn't surprise me to see Amazon come in there and buy the whole damn thing. We're going to buy all of Rivian, and now it's an Amazon company. Why? Because we bought a company that's producing electric vehicles that we are already a part of, and we could buy this company much, much cheaper, and now it's all under our control. We can put all Amazon Alexa stuff in Rivian's and just tie it all together. Why not, right? So this really, to me, is important because it allows for major merger and acquisition down the road. They can still make those acquisitions now, but think about it. If Amazon's got $89 billion in cash and they spent that today, we're overvalued on a lot of stuff. So wait for the big deals to come along. So these are your kings of cash. Now, to answer Les's question about how do we know, this is just stuff that's disclosed. Now, one other thing that I wanted to talk about, and I'm actually going to call this the chart of the week, which I think is phenomenal, is when you hear about cash on the sidelines, quite often, cash on the sidelines means individual investors like you and I. And how do they measure that? they measure that by savings and savings deposits. Are we seeing the amount of savings growing, which means the retail population has a lot of cash? Well, let's bring up the chart of the week there, which is going to be this bad boy right here. This is from the Federal Reserve, so not making up anything here. This is personal savings rate. What percentage of disposable income are people saving? And you look back into the 1960s. This actually goes back into the 1950s, right? But we'll just call it the 60s to be even. It looks like, back in the 1960s, people were saving 10% of their disposable income. It surged into the 1970s. We got up to about 17%. Great, that's awesome. And then, down in 2005, we bottomed out right around 1%. 1.4, I think, is the low. Yeah, 1.4% in 2005, meaning people weren't saving anything. But look what's happened since COVID, right? When COVID hit, savings rate was off the charts, the highest we've ever seen it in the history of the United States, 32% of disposable income. Why? Because it couldn't go anywhere. I got nothing to spend it on. I'm not going to baseball games. I'm not going out to bars. I'm not doing anything that would cost me a lot of money regularly. However, look where we are today. And I'm going to zoom back out here so we can see the longer term. Right now we're looking at 2.9. And that trend is very clearly down. People are saving less and less and less. So on the grand scheme of things, consumers like you or I are not a part of this one, right? We're not, I've been saving. I've been growing my savings, but I guess I'm an outlier. The average American is not saving, so that would not be considered, cash on the sidelines. I think what they're referring to when you hear it on TV is generally going to be institutional involvement, right? What are we looking at? Goldman Sachs and BlackRock. How much cash do they have on hand? What are they doing with their assets and potentially moving this market going forward? So that is my cash on. Did I answer your question, Les? I hope I answered your question with regards to cash on hand. And I'm sure many of you don't peek at this one, but it's something that you should keep an eye on. And here's an interesting list. Let me real quickly bring it up for you. Let's see. Companies with the most cash on hand. So TradingView has a really cool table here you can bring up. Just type in companies with the most cash on hand. And here it is. You can just pull up this list if you want and scroll through, find your company, get an idea of how much they have. You can see I've sorted it by cash on hand, which is this first column. But they really do have a great scanner here. If you want to look at a wide variety of criteria, TradingView is getting better and better. I used to use FinViz, but FinViz doesn't have cash on hand. Highest profit per employee. Ooh, that'd be a fun one. Any guesses on who has the highest profit per employee? I have no idea. I have not looked at this. So highest profit per employee. Man, it's tough because you look at a company like Amazon and you think they're making good profit, but they've got thousands and thousands of employees. The profit margins per, I'm going to say Tesla. A car company, I think, might be a big one. Let's see what you guys say on here. Big S says, per employee NVIDIA. Let's give it a shot. Let's go highest cash per employee. Am I even close? Wow. We're not even close, Big Ev. I don't even see. Look at all these energy companies. Man, it's just for the podcasters out there. Cheniere Energy, which is natural gas, number one. Wow, they make $6 million per employee. Goodness gracious. Roivant Sciences, AeroCap Holdings, Diamondback Energy, EOG Resources, that's energy. Chesapeake Energy, that's natural gas. Cheniere, man, a lot of energy. Let's see if there's any of the big names that we know. NVIDIA is on the list. They make about $1 million per employee. Not bad, right? SpaceX isn't publicly traded, Jimmy, so not quite yet. Chad's same thing. Chad, yeah, they're not publicly traded. Let me see how bad. Oh, man, I was way off. I thought Tesla would be high up here. Let me see if I can Control F. Oops. Control F. There we go. TSLA. Not even on this list. Wow, I was way off. Figured because it would sell in big ticket items, they'd have better profit margins. But anyway, fun filters out there for you guys to check out. But I had no idea that Cheniere Energy. If I had that as a trivia question, I would have lost big time on that one. $6 million per employee. It makes me wonder what they're getting paid. It makes me wonder what what they're getting paid. Okay. So that was it. I just want to share that with you. I think the Kings of Cash discussion is very important. I think you're going to hear more about this going forward, particularly if we do see any market struggles. If the market starts to have some issues, they'll start talking about these Kings of Cash and who's got all the money on hand. They have a lot more flexibility, a lot more that they can do with their coffers, right? They got billions of dollars. Man, you can do a lot when you have that kind of money. What was my next topic? Okay, so obviously tomorrow is the big day. You guys know tomorrow is going to be the unemployment report, which is going to be absolutely massive. Today we did have another pretty big number, and it has a lot more people thinking 50 basis points on the 18th. I still think one is the right thing to do, but if the data keeps coming in poorly, it does give them grounds to lower 50 basis points. A lot of people right now are saying that the Fed is too far behind, that they are behind the curve, if you will. They're being reactionary as opposed to being proactive. And I don't know if I necessarily agree with that. I think they started liftoff with regards to our rates late, but they were very aggressive to get those rates up as quickly as possible. And again, I'm in the camp of I don't think they need to quite lower yet, although they should for political reasons. So let's go look at the ADP non-farm employment change. You can see here the expectation. I'll highlight it in blue for you. Came out before the markets open, and they expected these numbers to go from 111,000 new jobs created, non-farm jobs, to 144,000. Well, it wasn't there. It actually came out at 99,000. Now, at first glance, you may go, oh, well, that's a pretty bad miss. But, you know, I'm a fan of looking at things in context of the big picture. So if I just gave you the data point, oh, well, they expect 144,000 jobs to be created, and we got 99, okay, we still got 99, right? The question is the 99 a good number? So how do we know that? Well, we go back and look historically. So here's a chart of it, and I'm just going to zoom in after the pandemic, right? And you can see the concerning trend here. We basically, every month, we've seen the fewer and fewer jobs being created. The expectation was we're going to come up with a lot more, and we missed that one. But if you notice, I'll keep my cursor right here. And I think that you'd all agree that the average, at least going back about the last year, maybe a little bit more, going back to this point here, which is October of 2023, it looks like the average would be somewhere around 130 to 140, right? Okay, is that good or bad? Well, let's go back and look before the pandemic what we're at. Remember, 130, 140 is kind of where we are now. Look at these numbers. This is from, I'll show you even longer term. This is from 2007 all the way through just before the pandemic. And you'll notice that the average during that period of time was more like 190 to 200. So we're considerably lower than we were back in the good times before COVID hit. Obviously, this data point here skews everything. But this is, in my opinion, somewhat concerning because it's showing deterioration, at least a lack of job creation. And that's not a good thing. And this is one of the data points I heard a lot of talking heads today going, oh, well, this is the reason why we're going to get 50 basis point cuts. We're going to get it. I don't know. We'll have to wait and see what comes up with your number tomorrow. Again, I think the aggressiveness of going 50 basis points, in my opinion, is too much. But who cares, right? It's, my opinion doesn't matter. I just have to trade it. Are you carrying puts overnight? I had 5B. Remember, you said 50 basis points. Yeah, I'm not directional puts. I sold puts. So I've got puts on NVIDIA, XLK, Rivian, US Steel. What else do I have? Silver. So yeah, I've got a bunch of puts open right now. So, yep. And again, all mine are expiring on the 20th. So I'm on the September 20th expiration. So where do we stand? Well, did it shift more today? No, it didn't change today. We were at 41%. I think yesterday was actually 44%. So it's shifted back up a little bit towards the 25 basis points. We're at 59% right now. And again, I'll check this daily because I think it's going to be interesting watching this go forward. And as we get towards that 18th day. And I need to reach out to Bill Addis and get him on the program. Get him booked and get him ready to get on the program. But that is your jobs report information that came out today. Really important one is going to be tomorrow, as you guys can see here. Not only do we have them for the U.S., Canada has them as well, but that's not as much of a market mover. Sorry, my neighbors to the north. The U.S. markets are going to be focused on this one right here, which is going to be 1 hour before the markets open. That's your unemployment rate. Right now, the expectation is going to go from 4.3 to 4.2. Man, I'll tell you, I don't see it going to 4.2. It almost feels like they've dropped that one, and we're going to disappoint, and then the market's going to have a big down day tomorrow based off of that one. We'll see. I believe it's all kind of a rigged little game here when it comes to the data points. But yeah, that's By lowering the expectation, you'd be bucking the trend, right? Here is your chart of unemployment rate, as we've seen many times, and there it is. We're just watching it get higher and higher and higher, and the expectations are that it's actually going to have a pullback, which would be the first drop since April of this year. Otherwise, it's just been higher, 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 higher. So I feel like we're going to beat that. I feel like we're going to come at over 4.3% based off the numbers we have this week with the JOLTS job openings, the ADP non-farm employment change, initial claims. Things aren't looking as rosy. Granted, 4.3% unemployment is still historically very low. It is one of those pieces of concern for many markets out there. Great, I closed all my SPY puts today. There's a time of day that's better to sell puts. Your implied volatility is typically going to be higher in the opening rush of the market because you have just more volatility in that opening, call it 30 minutes to an hour, and the last part of the day. That's for me when I'll try to do it. But I would rather sell something when it has a pretty significant sell-off and you see like the emotions are there. Good example was US Steel yesterday. So let's go back to X here and I'll break this down to 5 minutes so you can see how quickly US Steel, here's US Steel. And you can see today, just kind of hesitate, not too bad. And let me go and show you like a 5-minute window of yesterday's trading. You had this really aggressive sell-off here early on. Now this was kind of midday. It really wasn't anything that happened pre-market. It just happened midday. And as this thing was just falling apart, that's when I took a stab at it. I have the 25 puts. I sold the 25 puts on US Steel expiring on the 20th. But for me, Margaret, I watch the markets, and again, if it's a big company I like Nvidia, I like Rivian, although Rivian's probably the riskiest one in my portfolio right now, like US Steel. The company's not going to disappear. This is not going to go away. It's too critical to infrastructure. Buying on a shock sell-off like this, to me, is a no-brainer. And I'm not even buying it. I'm anticipating buying it if it gets down to 25. So I would prefer, like Warren Buffett, waiting to buy markets when they've been really depressed in value. I'm just doing that on a much shorter term basis, right? I think Warren Buffett would be doing this on a weekly or a monthly time frame. Well, I'm doing it on an intraday basis, and I run scans and filters for this. It's not my exclusive thing I do, but I definitely have scans and filters that you can put together really quick. That'll show you big publicly traded companies that have big sell. Let me show you real quick because this is a new feature in TradingView, which I'm not a fan. I wasn't a fan of at first, but if you go here to there's a little bullseye thing. I hope some of you guys use TradingView. That way this isn't a wasted lesson. But on the right-hand side, they have this new thing called screeners. It's like a little bullseye radar thing. You click on that, and I've got the most capitalized. Well, I'm going to go click on this, and I'm just going to say create a new screener. I'll call this biggest losers because I like the pain of a losing trade. What I'm going to do is I'm going to go click on this one, and I'm going to add in a new filter. And for me, I want market data, and I want average volume. And I'll say I want this average volume to be at least 1 million shares a day, right? I just want to get rid of all the little riffraff penny stock garbage. Because you might have a penny stock that has, let's see, 1, 2, 3. You might have a penny stock that has 100 million shares traded today. But yesterday was like 10,000, right? I need an average of at least 1 million a day so it's not a one-off. That's important for me. So right away, I have, these are all the stocks that traded over 1 million shares on average for the last 10 days. Well, I'm also going to go in here and go to percent change. And I'm going to say, show me the ones that are down 20% or more. All right, so there I have quite a few. And I'm going to change this even more because you'll see stuff in here like Atlas Technology. It's trading at 1/100th of a penny. I don't want any penny stocks. I hate penny stocks. I think they're a sucker bet. So I'll also go in here and say price. I want my price. I'll do a custom one here. I'll do a manual setup, and I'll say I want my price to be at least $10. So I apply this, and there's one company today that's down over 20% that trades on average 1 million shares a day, and that's NAPCO Security Technology, and there it is. Right, so that's a real easy way to set up a screener. I have them set up for both gains and losses. Right, sometimes if I see something that's up like 20, 30, 50, 80%, and it's into a really strong supply zone, I'll take a chance with a very small amount. As you guys know, shorting something that's up, 30, 40, 80% is is crazy. Like, it's really not recommended to do because there's a reason it's up that much, and that euphoria could continue to drive it higher. But if it's a solid company, an Amazon, Alphabet, Google, Meta, Nvidia, and it's down 20 or 30%, I'm really looking at selling some puts in that, and maybe even buying outright and selling covered calls against it. Because typically that panic moment, that fear moment, creates capitulation, and people just scream, they freak out, they sell their shares, and you got to think of it this way, guys. I'm actually doing a service. I'm helping out somebody in need. When I buy a stock that's down 30 or 40 or 50%, there's someone who's suffering, and they're losing. And this is where we step up and we become good humans, right? Here. I know you're underwater by 50% in your trade. It's okay. It's okay. Here's a shoulder to cry on. I'll just buy those shares from you, and now your pain is over. And ideally, I've purchased those shares right at the point where they bounce in a demand zone and move to the upside. If not, my plan would be for the next couple weeks or so. But yeah, there we go. My theater days are over. I know. You guys, stop, Merlin. The theater is enough. Let's see. Participate in volatility. Yes, Rob, I do look for volatility. As a seller of options, that's one of my favorite things to do. So you guys know I do in the 1% strategy. I'm predominantly using these ticker symbols here, which are the 11 sectors of the S&P 500. So you have consumer discretionary. But you look at the chart, there's no reason to be selling puts on this bad boy. I don't really care to own it. No big deal. Yeah, exactly, buy the dip. I'll take that off your hands. I'll help you. There. It's okay. It's okay. Here's industrials. Industrials is a good example. Like right now, you've witnessed a pretty substantial drop in industrials, although I'm looking at a deeper drop because you have this unfilled gap. So for those who don't know what I'm talking about, you look at XLI, which is the industrial ETF, the spider ETF for it. On August 14th, we jumped up the next day. So on August 15th, there was a pretty big gap up. And my assumption, just based off history, is it's going to be come right back down and close that gap. So, maybe if this continues to drift lower, I'll look at selling puts on industrials right around 125. But you've got a great uptrend going. Why not buy and into that uptrend? Things like financials. I'm not there yet. I'm not happy to buy financials quite yet. But if we got down maybe sub 44, now this area of consolidation right here, it goes back to August 20th and 21st. I might take a stab at that one. Generally, in my 1% accounts, actually not generally, but in my 1% accounts, I'm only allowed to trade diversified instruments, right? Just for anyone who is trying to follow that 1% thing. In those two accounts, they are only done on diversified instruments or like GLD and SLV. I'm not into the Greeks, Rob. Unfortunately, I am too stupid to use the Greeks, Rho and Vega, and I'll look at some of them, but yeah, typically. I'm not calculating in Vega into that. I'm just looking at, do I like it at that price? Is the premium worth it for me? Particularly in the 1% strategy account, the premium I'm getting has to be at least 1%. The U.S. steel trade, I want to say I collected over 40. It was like 42 or 45 cents per contract. I'll bring it up here. I sold the 25s. So here's the U.S. steel. I think I have so I sold the 25s. I collected 40 cents, but that's only for, just a few days. It's really not a long-term trade. So while you look at the rate of return, which was 40 cents per contract, I really have 12 days to go until we get to, or 12 bars, so it'll be open days. I have 12 days to go. So I'm going to make, over 1%. I'll be making about 1.8% rate of return for 12 days. If you would do that onto a monthly basis, I'm making close to 4, maybe 5% for the month if I annualize that. So, fine. Those types of trades I love to make. And again, this was done predominantly because of that volatility. Did I option Boeing? I did not. I've been watching it. I actually pulled up the option chain yesterday not yesterday. Tuesday. I pulled it up Tuesday when you had that big down day. The premium just wasn't there yet for the 140s. I'm stubborn, Big Ab. I'm just waiting to go to those 140s. Actually, it doesn't have to get to the 140s, but if I'm going to get it down to the 140 price, here's my deal. I'm going to look at that 140 strike price, right? And if I'm looking at the 140 strike price, 1% rate of return would be $1.40. So if the 140 option is going to pay me $1.40 or more for less than 30 days, then I'll probably take it. But they haven't been, and that's just in that 1% account. So And actually in the second 1% account. I was tempted at 159. Well, I'll let you know, Big Ev. I've been pretty transparent with you guys, letting you know when I buy and what I buy or sell with regards to options. So we'll keep that going. Any thoughts about how much lower Intel will go before we see a bounce? We've had this discussion before, Joe, and it's an interesting one. If Intel does what is being discussed, then this may be, and I better say this very carefully, this is not financial advice, but may be the bottom. And the only reason I say that is if Intel doesn't change what they're doing, this is going to continue to go lower. And who knows where the heck the bottom's going to be. It could be, historic all-time lows. Let's bring up your monthly here so you guys can see where it's come from. You could see easily getting back down to 12, 13, even lower if they don't change their business model. And I think what's gone on with their price chart is reflecting the fact that they have not changed their business model. However, with a leadership change over there at Intel and people now calling for this change, which was talked about several years back, which is splitting the company, splitting it into the foundry, which just makes chips, and then Intel, which makes their own processing units, right? That's the different one, right? That's what makes this different. And if they do split this, if all of a sudden Intel says we're going to have two separate companies, then I think that gap you see is going to close fairly quickly. And that's $29. That's a huge premium. But as Rob says, yeah, we're basing in that zone. We've been stuck in this yellow box. We did break above it on last Friday. But really, it's just kind of floundering. And I'll actually raise this just a hair because I cut out that tail. You're looking, that's about right. So yeah, we're still sideways. It doesn't look good. But if you believe the talk, which is kind of a whisper at this point, that they're going to split this company into two, which I think would be the smart thing to do. If I was on their board of directors, I would absolutely be saying, let's do this, guys, because I'm making some money off this bad boy. But we'll have to see. Big Ups, I wouldn't mind owning Intel between 12 and 15. I concur with you on that one. If you look back here to this older data, let's go way back. All right, that's where we are presently. We're kind of right at a very pivotal point, which is this $19.40 mark. We're right there. Now, if you go back further, you do see 17s. You see a little area right around this 15, and then ultimately $12 would be. And I'm with you, Big Eb. I think I would be okay buying at $12. I think at that point they would be ripe for acquisition. Someone could come in and buy them and take over. But again, they really have to. They got to change their model, man. They got to change that model. If they're not, it's like they're making cars that have a crank engine. That's gone. It's push start today, buddy. Push start. You got to update your assembly line, change your processes, and go for what people want, as opposed to they had a monopoly back in the day where you pretty much had to use their chip, right? You bought a computer, it was Intel inside. It's like, oh, Intel inside. Now it's like, I kind of want AMD or I want this. Yeah, different day. Skilled Stocksman. Hello, everybody. I got to be quick and catch the rest of the replay tonight. Japanese yen, cup and handle, out of the daily if anyone wants or cares. Still doing the Forex, huh? Let's go and bring that. Let's bring up the JPY here, USD, since we just talked about that one with David the other day. You're talking an inverted cup and handle, right? So you got it upside. Oh, I guess if you're looking at the Japanese yen by itself, yes, this would be a cup and handle formation. But because it's upside down on the USD JPY, I could go look at the futures side of things. But yeah. You could argue that you've seen this sell-off here, rallied a little bit, now it's breaking. I think that this goes in line with what David was talking about, what I was talking about, and what Don Fron was talking about, which is we all see more weakness coming for the U.S. dollar against the Japanese yen. So yeah, you could call it a cup and handle, you could call it a trend breakout to the downside, you could call it a descending triangle, whatever. They all speak the same thing, which is prices getting worse for USD against the Japanese yen. And again, there are a lot of factors there, but that trend's probably going to continue to go lower until it doesn't. So, which platform do I use for trading options? A bunch. In my 1% accounts, those are just E-Trades. So I've got multiple accounts at E-Trade, 3 big accounts there. I've recently redone one because it was 2. Now there's 3 there. And those are just real simple ones. I've also got accounts at Thinkorswim, which is now Charles Schwab, so that's incorporated in. So yeah, predominantly Thinkorswim and through E-Trade, believe it or not. Pretty simple. A lot of the analysis I'm doing, technical analysis, I'm just using TradingView for free because it's just an easier platform to use. Exactly, Rob. Strength in Japanese yen, weaker USD. Let me bring up the futures contract here for you just so we can see the futures contract. Let's not do, 1 second here. We're going to go with JPY, we'll go USD. Actually, let's do the futures product. So I think you guys might like that one. And we'll go here to the CME. This is the micro product. So there you go. This is the micro Japanese yen. But you can see that same picture. This is the Japanese yen itself. And you can see that same picture of strength. It's a little bit weaker on this one. It actually on the future or on the spot currency, it actually looks like it's breaking through right now. But yeah, you have this, call it ascending triangle, call it a cup and handle. Yeah, looking good. This is the Japanese yen getting much stronger because people are selling dollars to buy yen to pay back these carry trade loans that were free. All right, what else do I got for you? And I had anything else in there? That was it. This is a question that came through on YouTube. This is from Chris Dudu. Thank you very much for this question. He says, what would it mean for the markets if everyone holding more than $100 million in stock would have to pay 250 or 25% unrealized gains tax? How much should they have to sell in order to pay up? First off, this is an idiotic idea. Again, stupid idea. I think this would cause a significant market crash. If you tax everyone who had $100 million, and this is institutional stuff, and granted, someone like Elon Musk, who probably has $100 million, he's got billions of dollars worth of capital gains somewhere on his shares or whatever, he would be forced to sell that, some of it, to pay off the taxes there. To me, I think it'd be absolutely moronic if that went through. And as taxpayers, you should be saying something on this. Do I feel that the people at the top should be carrying their fair share? Absolutely. What I can't stand is when, I'll go and pay my taxes. And let's say hypothetically, many of you, let's say you paid, I don't know, $50,000 in taxes this year. And you made, I made 200 grand and I paid $50,000 in taxes. I'm just making up numbers, okay? I made 200 grand this year. I paid 50K in taxes. And then you look at somebody who's making $100 million for the year and they paid $50,000 in taxes. That's not right in my opinion. I think that should be fixed, but just arbitrarily saying unrealized capital gains tax of 25% is idiotic because now you put yourself in a position of, I have to pay capital gains on something that I have not locked in yet. And what if I pay my capital gains tax on it, 25%, and that investment goes to zero? Can I write all those losses off? It would open a totally different doorway to the tax code, I think. So I'm not a big fan of that. Do I like the flat tax? I think that there's definitely some merits for it. I think it'd be easier. I think it'd be much easier if there was just a flat tax, period. Now remember, what you did, you're paying X percent. I think I would feel better about that. Although, if I ever got to the point where I had hundreds of millions of dollars, I'd be against it. Why? Because I can get lawyers, attorneys, and CPAs and effectively bring my tax rate down to almost zero. So yeah, I think it probably would be better, but I don't know. I need to know all the details about a flat tax and all the pros and cons of it. But at face value, I think, yes, I think it would make sense just to go and say across the board, I don't care, you make this much, here's how much you're paying. Now, what will happen is someone like an Elon Musk will say, well, I didn't make $20 billion last year. That was all this and this and this. And then I actually only made $100,000. So they will skirt that system as well. Can't tax unrealized capital gain. It'll never happen. I'm with you. You can tax unrealized capital gains. You can absolutely tax unrealized capital gains. Should you? No way. You'll create way more problems. And I don't understand what the point is. Fair share to be a socialist or a communist is totally different than what you think. Yes, I'm not a communist. I'm not a socialist either. I'm not a socialist. Absolutely not. I think that you need to earn your keep. But the ability for people to hide money and pay less taxes because they have access to better resources doesn't make sense to me. I don't think that that's right. Let's see. Which platform do you find easiest to work with? And trying to find easy options platform or learn easiest. Thinkorswim is not an easy platform. Thinkorswim is actually fairly complicated. But if you know how to use trading platforms, they get easier. If you use something like I've traded options on Schwab's platform, I've traded on E-Trade's platform, I've traded on Ameritrade's platform. Most of the retail stuff, they're all pretty easy. E-Trade, it's simple. You type in your symbol, you click on the chain, brings up the chain, you click on the price. It's fairly easy. Now, if you're someone who really wants to do a lot of the analytics, the real detailed, charts of decay and add in all theta and rho and all that, then you got to use something like Thinkorswim. I mean, that's the best platform to use for options. It's the most advanced. He says, call Corey Lane. Corey uses Thinkorswim. Actually, no. He uses Thinkorswim for personal. For his institutional, he uses Interactive Brokers, I believe. I think that's what he said. Let's see. All right, so yeah, Chris Dudu, that's my thoughts on it. I don't think it'll pass. I'm kind of in that same camp. I don't think it'll pass. There's just way too much. A lot of people are just shaking their heads on both sides of the aisle like, what? That is who proposed that? Just nuts. I stick to 2 platforms because they're complicated. Yeah, I've used a lot of platforms over the years. I've literally used dozens and dozens of platforms, direct access-wise, going back in the late 90s. And most of those were equities, and then there's futures, a lot of different futures, a lot of different Forex. But, Thinkorswim was still the king of options platform. Exactly, yeah, so he is. OTA Trade, I haven't used it, Jimmy. OTA Trade, that goes through Tradier. Is it Tradier? I forgot. I think OTA Trader, I think it's Tradier. You can pay $10 a month and have unlimited options trades. And it's something I was considering switching over to. I just haven't done it yet. You get stuck in your ways of comfort, and that's kind of where I'm at. The market trading like you're in a recession or going into a recession? Well, I think not necessarily, Michael. I wouldn't say it's a recession going into a recession. I would say the markets are trending like there's a lot of uncertainty about what the future may hold. And we'll get some clarity tomorrow, right? As soon as those unemployment numbers come out tomorrow, we'll get a much better read of what that interest rate cut may be on September 18th. As far as markets go, just look at the picture. What's the picture telling you? The picture's telling you this market is in an uptrend. Period. There's no arguing that. And the only thing I would say, if we look to here, right, I'd say absolute uptrend, no argument at all. Then we get to this point right here. And it did not make a new high. That doesn't mean that this trend is over. It doesn't mean it's done. But it does signal, great. In my opinion, again, this is all just my personal take. It does signal just a sign of weakness because it didn't make a new high this week. And we talked about it the way we finished last week that, hey, if things are going to continue to move higher, we need to make a new high. We have to, and we didn't. So now I think what's going to happen is, let's see what the reaction is to the unemployment numbers for tomorrow. If we get some good numbers and the markets rejoice, and maybe we'll get back up and continue this uptrend. I think it's probably going to be more of a down day. I think you're going to see some negative response to that unemployment numbers, which will probably be worse than expected. And that will cause this to go lower. And then now we're in that question of, well, where's this thing going to go, right? At this point right now, again, I always love to reference Bob Dunn because he's the monthly and weekly chart guy. Look at that picture there. None of you can come out here, not one of you can come out here and say that at any point of this, except for right here, the COVID, that this was an uptrend was broken, right? It's just been up, 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 up. You can go back to the weekly time frame on this bad boy, and you still have a similar picture. Now, granted, I would argue that what happened here in 2021, that may have broken that uptrend belief for me because we broke some lows and we kept on going, and that one, I did okay during part of this. The last part stopped me out, but all in all, we're still looking good from a market perspective. So I wouldn't say the markets are looking at a recession. I would say that there is cautiousness in here, and maybe some of that optimism, in my opinion, is starting to go away. So if that optimism does go away, then we'll be back at this 5,200. If we close below 5,200, then I think we'll start to see a lot more downside movement, and maybe we end up at this longer-term red line that I see at 4,963. But there's a lot of ifs between today and this lower red line. I mean, that would be from current levels about a 10% decline, which is not unreasonable. Everybody knows that that's totally plausible, especially if there's fear. It could happen in a week. We could get a 10% slide. But all in all, it looks fine. Just this last little part right here has me going, oh, it didn't make a new high. Therefore, there has to be some reason for it, and that's just buyers aren't interested in pushing it to all-time highs again. Doesn't mean we're done, but it certainly is that first little, checklist of weakness that I like to go through. So that's one part. Second part will be if we just continue to drop lower here and break 5,200, then it starts to become an uglier and uglier picture. Let's see, Oxy, huh? Occidental Petroleum. He says, where did that go? He said Oxy beat about a week or so ago and hit a new low today. Yeah. And where was your entry for that? Your entry would have been once it broke these lows. So you have these lows put in. It's a double bottom, and it broke those. So literally your entry, if you're playing breakouts, your entry short was yesterday. Now from there, where's Occidental Petroleum going? I'll tell you, this picture does not look good at all. Since it just broke, you've got one last little stopping point, which goes all the way back to April 26th of 2022. That low price, I'll even put a line on there for you just so you can kind of see it. That is right there. That's 51.77. So my guess is now that it's broken, it'll go down to 51.77, somewhere around that. And if that breaks, then you're in trouble. Occidental Petroleum could have a big drop from there. So, oh yeah, Les, thank you for bringing that one up. I think it was it Mike? Did I bet you the DJT thing? That's what it was. DJT finally dropped below 18 bucks. I said it was going to happen. I knew it was going to happen. This thing is a total pump and dump money grab for Mr. Trump, who has 60% of the shares. DJT. There it is. All right, we were talking about it back here when it was surging up on this day right here. Literally this day right here, which was the March 26th of this year. I said within 30 days, we'll be down below 18. I think Mike LaRusso took that bet. Unfortunately, it got really close. We got down to, what was that low price there? Was 22 bucks. Today, back down below 18. I believe it's middle of this month, maybe in the next couple weeks, Trump can officially sell his shares of DJT. And I think what you're getting is a lot of people front running that because they know he's selling those shares as soon as he can, right? The CEO of DJT dumping his stock. Yeah, and we could go back out there and look at this real quick. Let's go to FinViz. We talked the other day about Jensen Huang selling his shares. No big deal. That was structured, consistent, just keeps on selling. I'm going to scroll down here. You can go all the bottom. There's insider trading. So the CFO, there's really not a lot of transactions going on, but look at the last few, August 22nd, so a month ago, these guys now fill out a whole bunch of form, and they're unloading. They still hold some, but they're definitely unloading their shares and locking in some profit, making some money. And you know what? Good for them. Walk away. Run. And so, let's say DJT needs another pump in holding the bag. Yep. So another thing that's interesting here is when DJT was formalizing this deal with President Trump saying, hey, this is the new Truth Social. Look, a group of developers came to Trump and said, put your name on this. We'll call it whatever you want to call it. We'll call it Trump Social, whatever. You'll put your name, your stamp, and you talk about it, and we'll give you 60% of the company. That's all that happened. Trump didn't do anything here. There's the same thing is happening. I think, Margaret, you brought this one up. There is a Trump coin that the company, that his family is working on, which is also a scam. It's a money grab fraud. 4 developers got together with 3 Trump family members to make this cryptocurrency. And the developers of this cryptocurrency built one that already got hacked. And 70% of the tokens go to the developers. So, I can't fault him. He's smart because he's just capitalizing on the trend of the day. The trend of the day was SPACs, specialty purpose acquisition companies, and crypto. And Trump's using both of those to make billions of dollars. So bravo to him. For me, ethically, I couldn't do that because when you're getting an investor into your product or your service, and there's really not much backing it, and it's not going to succeed, but you're trying to use media and your notoriety to push something up, I have issue with that because there can be a lot of average people that are left holding the bag who might be very devout followers and just whatever Trump says to buy, they're going to buy. And they're going to be the ones holding the bag as he walks away with all the money. So we'll see what happens with DJT. The new crypto one, I'm going to do a better show. I'll do a show specifically on his crypto maybe in a week or so. I want to get more facts together. It's not out there yet, but I need to read the white paper and go to GitHub and look at the code and see if I can find anything out about it. But yeah, DJT, Stay away from that bad boy. I've been saying that for a long time. You know, I wish I just shorted it outright when it was back up at $70, like, you know, we were talking about on the show. But all right, that's going to do it for me. Let's wrap things up here. I'm going to go and show you your economic calendar, which we've already done. But let's just really quickly get that out there again. This is the big day. Unemployment claims coming out tomorrow for the U.S. You also have average hourly earnings. You have non-farm employment change. You have 2 members of the FOMC will be speaking. So a big day. And on the earnings front, there's really nothing out there that's that noteworthy. Let me bring up the earnings calendar, but I don't remember anything on Friday being a big name that you should really be worried about. Let's see. Oh, yeah. That was, yeah, sorry. There is a big name. I thought Broadcom was today. Broadcom is going to be tomorrow. That can't be right. It can't be right. Nobody reports Friday. Yeah, okay, they were after today. That's what I thought. I knew they reported today. Let's go look at Avgo here real quick since they reported earnings. AVGO. I was like, wait, who reports after on a Friday? Ooh, down 6%. So Broadcom clearly not doing well with their earnings announcement. Down 6% in the after hour. So there's your Broadcom one. So yeah, tomorrow you've got nothing on the earnings front. This is you have big lots, but it'll all be before market open, and there's nothing that's really that gigantic that's going to impact these markets. Yep, I got it, Lisa. I knew it was. I knew there's no way that Broadcom would report on a Friday night. No one reports after market close on a Friday. It just doesn't happen. Cool. All right. Well, tomorrow's going to be a fun one. I will most likely have a nice glass of whiskey in hand. I'm going to be pretty excited about that unemployment number. Should be a lot of volatility. Remember, that's going to happen before the market's open. So when you get there and you're all poised and ready to go trade the open, it'll already be factored in. All the TV channels will be talking about it and should be a lot of fun. On a side note, I guess the guys at Ninja Trader liked when I was on their program, so I'll be back on there on September 18th. So Fed Day, I'll be on Ninja Trader's channel, and I'm going to try to get those guys over here on this channel just because they're sounding like real stand-up guys, and why not? More people for you to talk to about these markets. So thank you guys so much. Hope you enjoyed today's show. Unfortunately, we're not the kings of cash, but it's the markets that's the king of cash. And right now, the king, the prophet, the messiah of cash right now is Berkshire Hathaway. Gotta love Warren Buffett. All right, everybody, that's going to do it for me. Have a fantastic remainder of your day. I will see you tomorrow. Take care.